Here we have Bitcoin versus the dollar, of course, on actually CME. And in this case, I want to follow up on the last 24 hours when we last spoke, of which we did say a likely another sweep of the lows plus a bounce with targets back up towards the short and medium term time frame range highs, which is that mid $43,000 number. So far, we've got the sweep of the lows, even a little bit of a lower low right here. And now we do see Bitcoin actually putting up a bit of volume on those lows, which is what we want to see on what should be, you know, at least a good medium term time frame low, working its way up and hopefully given the first bounce that we've seen in quite some time, realistically since late December, of course. So with that in mind, when you do see something like this, yes, I do think that we're pretty damn close here. At minimum for a bit of a medium-term low. That does not imply that we have a long-term low in place. We're going to talk about the conditions necessary for that soon enough. But first and foremost, let's go down to the lower-term timeframes right around here. And I do believe that we are building up, and we've now thus confirmed bullish divergence on all timeframes up to certainly a 4-hour. I believe it's all the way up to a 6-hour now as well. Yes, indeed it is. And a 12-hour is also populating itself right here between this point from our December 6 lows and this low right here. I think it's a little more visible than what we see on, of course, spot price action as well, which would actually have 3 drives, 1, 2, 3 coming off the low right there. And also, I do believe that we have a trend line test officially now of the weekly here on the weekly RSI for Bitcoin, which would be coming in right at the edge of the bearish control zone. So a likely place to bounce as we do kind of head into this region. I'm going to turn off the alerts for right now. Apologies on that. And so I do look at this as an area, as an area that regardless of whether you're bullish or bearish, you're probably looking for a bit of a bouncy bounce from this regions. Now going into here on spot price action, we actually do see, yes, it's actually fully confirmed on spot price action, which is really, really good. And then we do also do see on the Jewel Light, which by the way, you can find a link in the description below, which that indicator will actually be expiring. It'll be vanishing within a couple, I think 2 to 3 weeks now. Probably like 3 weeks or something like that. Anyways, you'll have a bit of a warning on it. And yes, we do see it getting yet again another upside curvature on the 4-hour, which is good. And I think the 12-hour and the daily are starting to finally turn as well from very, 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 very low levels, might I add. Here's your 12-hour, and yes, here's your daily as well. The daily, by the way, has not been this low basically since November 2019, which was coming off of the major lows right around here before about a 60% run. And I do believe there are a few other iterations where we do see this of the same sort of stature, of which we could just briefly go over them. One of them being, of course, the December 2018 lows at 3,100 right here. And then, of course, we did see it again, I think somewhere around the flu dump lows in March 2020. Yes, somewhere right around there. So again, it doesn't necessarily mean that we have like the macro low in, for example. Obviously, a lot more things need to happen to essentially confirm that sort of a narrative. But for right now, I do think that we have a nice low in and probably do work our way up sideways and up from here. Now, that does come with an invalidation condition. As always, there is a non-zero probability that things just fail as they typically can. And for right now, there are a few things to be aware of right here that do represent the short-term bearish side. Now, I don't think that these will be playing out, but hey, I do think that I would be remiss to not identify these. And that would be first and foremost, 4-hour hidden bearish divergence is populating itself right here as we are making ever so slightly higher highs on 4-hour RSI, and thus so far still have lower highs on price action. Now, that'll be completely negated with any sort of a closure back above this last 9th of January high right here, which is about on a closing basis. Let me just double check, 42,700. And yes, if that is taken out, I would be looking for Bitcoin to pop back up and test somewhere around our medium-term time frame range highs, which actually will have a lot of meaning. That being the 43,700-ish region, the same areas that we've been looking at for the past few days here. So all of this does hold to a lot of weight. Now, what would make me negate all this and look for that hidden bearish divergence to play out with another retest below $40,000, probably somewhere around 38 to 38,500? Well, in this case, because we do have this nice structure right here, any sort of a closing lower low, even on an hourly at this case, because this is, a high volume dildo right there, which should hold weight for the general trend, is going to be below yesterday's low, essentially. Now, could you front run a situation like that? Yep, absolutely. I do believe a 4-hour also below about 40,500 would do it for me as well. One of those two scenarios would be good enough, and well, I would be looking for essentially continuation to the downside, somewhere around 38,000 to 38,500-ish region with another bounce implied there. Then I want to come back to it after that. Now, here's also the other thing, and I do want to kind of pull like a bit of a thread through this whole analysis. Before we get that, I should probably go over this as well. Yeah, we should go over this. So we also do see daily stochastic momentum officially turning up for the first time since basically late December, and that was the run that did bring Bitcoin back up to the range highs at $52,000. And now you can see that it is crossing up for the first time officially also based off of this 9.5 read right here on this green horizontal line, which has accurately gotten some pretty impressive lows in the past, but not always major lows. Sometimes they have failed, but at least they have produced some pretty impressive bounces. And in this case right here, this will be remaining with upside posturing as long as Bitcoin is closed above 40,350 or so. I believe the 12-hour is certainly already there. Indeed it is, and that is building up above it about 40,850. So still so far so good. 6 hours also, I believe, heading up. Indeed it is 41,250. And then shorter term time frames should be in a bit more of a corrective posturing, I'm going to guess. Actually, no, 4-hour is also freshly up above 41,300, and hourly is probably flip-flop right here. Yes, indeed, it's actually quite high and will be turning down for 42,250 or so. So very short term time frames probably do pull back a little bit, consolidate a little bit more, and then we'd be looking for BULOS to take over in the next few days here before end of week, bringing us back up above those critical regions, specifically to 43,700. That's the one that does hold a lot of weight, which we'll go over soon enough. And then I actually do want to briefly check out the 2-day and then the 5-day. Yes, the 2-day, which is actually closing not tonight, but tomorrow night, is going to be officially crossing up for the first time basically since 1st of December, in fact, which would be confirmed with any sort of closure above 42,300. So that would also be good. And then the 5-day and the weekly have also pretty much fully corrected here as well, as we do see 5-day stochastic momentum coming all the way down. Now we'll officially cross the upside with any sort of a closure on the next 5-day, which is not happening anytime soon. I think we just closed one last night, but that would be above 46,550. So these numbers do start to hold a lot of weight. Anyways, I want to go in now and talk a little bit about the more macro identification of what this could potentially look like if BULOS do take over, which I think is still very far away. Please understand, and this is a critical portion of the analysis, that as long as we see the global open interest still above, 12 billion or anything above 11 billion, realistically, I do hold reservation for Bitcoin putting in anything resembling, a major, massive macro low, which I think is what a lot of people are looking for, until this really does come back down, specifically to what we saw back in early December, somewhere comparable around there, preferably lower would be better, to be quite honest with you as well. I do not look at this as a full reset. And just go over the quick analysis of this. Look, anytime that we've seen this above 13 billion with a B, it has resulted in 30% moves to the downside or more. Actually, sorry, no, 20% move to the downside or more. In some cases, 50 to 60%, which is rather nasty. So just quickly going over this, and yes, we do have more iterations than this, but I don't think it's necessary to go over. We did see the first iteration here on the board in March. Of course, that did precipitate the move down from 60,000 all the way to 50,000 within just a couple weeks right there. Of course, the time other than that we did see a majorly critical read was obviously on the April $65,000 all-time high before going down to $30,000 and resetting it fully down to about 5 billion, of course, right here. Then marched back up into the July bear trap, of which we did see a high of about $53,000 and also another 13 billion read right here, in fact, before going all the way back down to $40,000. That was a $13,000 move, pretty much all done within a day. And then, of course, our most recent all-time highs at $69,000 all-time high in November. That did precipitate yet again another highest of high reads before coming back down to $40,000, which is kind of where we're at right now. And you did see this open interest read once again go just above 13 billion, actually 13.5 billion right here on that failed rally attempt to $52,000, of which Bitcoin just put in another lower high on the higher term timeframes, which is not great, obviously. Elsa's coughing in the background because she's probably sick, as am I, but it's all good, man. It's all good. And of course, looking at this right here, we can still see that this will unravel a little bit more naturally. Now, of course, and to address a common comment that I get on this, yes, we do naturally expect this number to over time elevate to the upside naturally, with just, more people getting involved within this market. A higher market cap asset is naturally going to have more leverage positions on the board. No shit. But when you compare the market cap to what we had, just back on over here, or even just last year, it's pretty comparable right now. So whilst we do have, new institutions and new vehicles to get leverage positions in, aka an ETF based futures, well, I don't think that would be that different at this point. And again, anywhere down around about 11 billion or so, that's where this becomes a lot more interesting. And to be fair, we are very close. Thus far, we've seen a low on the open interest all the way down to about 11.79 billion. And of course, it could come down a little bit more. So I suspect that the next move down, if this is going to end up being bullish, which again, we haven't even gone over the full criteria for that until this even happens. I mean, this is fucking bearish is what it is, to be fair. I mean, all time frame trends are to the downside for what it's worth right now. Well, we do want to see essentially shorts closing to actually bring this number down. As I imagine, a lot of this is based off of short open interest. And well, when are you going to start to close your positions if you are short? Probably when you come down to a major area like we're at right now at $40,000. And you can imagine that, it'd just be prudent to be taking at least a little bit of profit, if not a good amount of profit. Obviously, most of the longs have probably been washed out already because, well, they haven't really been having too much going for them for the last couple months, which is probably not great, but ultimately, and to be very, very clear here, we're not talking about super over leveraged, 10x plus traders who might be watching streams like this, commenting, "Fuck you, Crown Man! I'm still in position." It's like, no, that's different. We're talking about big institutions, people actually fucking move this market. Those people who are using, rather low leverage, but still, getting their positions in on that metric. Well, that is who we're talking about, and that is who runs the market, and that is who, well, is likely going to start to change this stuff around right here. So we are getting closer, and of course I did put a tweet out on this yesterday and actually the week prior as well, kind of just drawing in a bit of a regression from these lows that you see over the summer, and of course in September, more recently in December, and then perhaps once again here in early January of 2022. That, I'm just curious to see if that actually holds through as a relationship over time, as that would kind of suggest that we are getting pretty damn close right there. Now let's start to pull the whole needle through and really put a bow on this damn analysis. And first and foremost, I want to be very directly clear. Look, there ain't no talks about a macro low being in, no matter what the fuck I say about anything else that's going to follow this statement, until at goddamn minimum, and this is not even a minimum, this is like the prerequisite to the minimum, Bitcoin's back above, closing 4-hour dildos back above 43,700. If you get something like that, okay, we can start to consider this current low $40,000 region as potentially a major and complex low, which will still very likely take a long time to actually populate itself. And then what would be the most important thing to be getting? Well, you need a goddamn uptrend, and the trend is your friend, and the trend has not been your friend for a very long time. And in this case, what would actually create an uptrend? Well, you need both a higher high and a higher low. Right now, your last lower high is all the way around $51,000 to $52,000. Until Bitcoin's back above there ain't no talks about any sort of macro low being in. Of course, it could come about multiple ways. You could get a higher high and a higher low just by doing something like this, where you initially pop back up, come back down, set in a higher low first, then pop back up above here, just as a general aside. And I would go as far as saying you're probably going to start to talk about major reversals back above, Jesus Christ, that was a terrible line. Sorry about this. Probably back above this region right here. But I can come up with a few reasons why I do think that this is an area that, could reasonably, theoretically be a good major low. So first and foremost, we do see that the open interest is slowly but surely correcting down to those regions. Also, I want to bring up sentiment indicators over here as well. So what we're going to do is we're going to once again look at the fear and greed index. We have yet again another extreme fearful read, as Bitcoin essentially, made a new low yesterday, although did not close below any new lows, which is very, very important, obviously. But in this case right here, you can almost see a fractal relationship between the fear and greed index sentiments on this current low that we see right here versus what we saw over the summer. It took about 2.5 months over the summer in the very fearful zone before we did have the ultimate mega bear trap from 30,000 all the way up to 53,000, and then, continuation to 69,000, which is a great number. But again, very, very similar reads right here. You get this initial pop up rejection on your range highs, come back down, and then see the same thing right here, make an ever so slightly lower low, and then trudge your way on over the next month and retest that low before getting the bear trap. Well, you kind of have the same thing going on right here. And yes, that would imply that Bitcoin still has probably at least a few weeks, maybe even another month kind of within this region. And very likely in between there's going to be a rally from this region. That rally gets rejected, retest the lows, and well, so on and so forth. So we'll quickly go over on it on price action right here as well. I know yesterday I didn't do the best job of doing this because my face was covering up the charts, so I'll make sure that it's all visible right here. There you go. And let's do this once again. So we're talking about this price action right here, right? Or let me actually get it properly because this is really important. We're talking about this price action right here over the summer. That's what we're measuring up alongside the sentiment indicators. You get this first low right here. Yep, we get this first low right here. You come down about a month later and retest it right here. Boom and boom. Okay, beautiful. Then pop back up. And by the way, I forgot to mention that you do get rejected at your range highs right here. Okay, you got rejected at range highs right there. Boom. Okay, we got that. We got that. Just want to be thorough because I have OCD. And then you come back down down, yes, to your lows. You test your lows, even making an ever so slightly lower low right here, by the way, which did happen over the summer as well, and we did certainly get it right on over here as well. No closures below that low, and that's what would invalidate this analysis, by the way, if you are going to be looking at this as a fractal, which I'm not a humongous fan of fractals to begin with, but this actually would fit the bill. Again, talking about this area right here specifically, it looks like an upside down fucked up face or something, like with the black eye maybe. Anyways, so what we'd expect from there is a rally back up somewhere around the 21, somewhere between the 21 and the 200 simple, and then comes back down, bases yet again on the lows, maybe even closing right around the lows, but that is your bear trap confirmed once you get back above your, in this case, the 55, and at least in my opinion, although you get your first initial sort of bear trap indications on this move up right around here. Anyways, now I'm getting way too down into the weeds. We don't need to know that right now. What we need to know is we need to know the relationship within this region right here, of which that does still hold to fruition. Again, looking at sentiment indicators right here, very, 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 very similar, and also that would play into the analysis that we have been looking at with, of course, the hash ribbons indicator. Now, I saw someone earlier comment, why do you not use the capitulation signals as judging the last higher lows? I mean, and no offense, I'm not trying to be an asshole to you right now, but fucking obviously, because that would not work. If you use the capitulation signal right here, your last daily low would be right here. That relationship doesn't hold true. So it obviously doesn't fucking work that way. Sorry. I don't mean to be throwing, shit on anyone. It's just, I saw that comments a few times, and it's like, no, that's very obviously and easily invalidated with just a modicum of analysis right there. We're even just looking at the last year price action, of which we can look at the last 13 years of price action, or 10 years, or 12 years, whatever it is, man. Stats has been around for since 2009, 2010, whatever it is. Anyways, what I want to talk about now, of course, is the hash ribbons indicator, which anytime that we have seen the blue buy signature right here, it has identified that the last daily low prior to that blue buy signature has been the macro low, or I wouldn't say the macro low, although it was a major low before never getting closed below ever again in Bitcoin's history. I'll go over a few examples here. There is one example where this did not work out of all 18 iterations, but just quickly going through it so that I don't bore the ever-loving shit out of you, we can just quickly see right here, you get the blue buy signal off of that hash ribbons indicator. The daily low prior to that was, of course, $17,000 in November, and Bitcoin, while it does test around there, maybe even in some cases what's below there, although not in this case, obviously, well, that is never closed below ever again on a daily time frame for the eternity of Bitcoin, at least until now. I mean, could happen, I suppose. Of course, we have another example right here, another blue buy signal. We do see the daily low prior to that was about 8,900 or so. Yes, Bitcoin does come back down, even wicks right to that region. Again, it can wick below, that's fine, but no closures below, and of course, Bitcoin has never closed below 8,900 ever since. We have another example right here, of course, coming in from April of 2020, and where's your last low before that blue buy signal? That would be right here, 6,800. Obviously, Bitcoin's never closed below there ever since again, and the one iteration where this did not work out of all 18 would be right here in December 2019, where you got this blue buy signature. The last daily low prior to that was 6,600. Bitcoin rallied up 66% actually after that, or sorry, maybe not 66, but like 60% or something. Actually, pretty damn close, 65%. All right, fair enough. And then, of course, we have the old flu dump, which completely negated that. That is the one iteration in history where that relationship did not hold out. And of course, that was, well, in some cases, a black swan. Some people might argue that. Why am I bringing this up right now? Why am I fucking harping on this bullshit? Because our last blue buy signal was right here in August 7th of the year 2021. The last daily prior low to that signature was 37,500. And while Bitcoin did come down and test, around that region, and again, can even get a wick down around there, just don't want to see any closures below there. That relationship would still suggest, statistically speaking, and very much relevant, at least if you look at statistics as relevant in trading, which is all that I care about, actually, although some people out there might disagree. Fair enough. More power to you. I hope that you stay safe in whatever investments or whatever trading schemes that you're in. But ultimately, that would suggest that, hey, we're pretty fucking close around there. So that would be relevant to be looking at as a potential basing region. Again, pulling all of the all of the cards together. So please understand all of the different levels of validation that are relevant for the short-term timeframes, the medium-term timeframes, and of course the high and the macro timeframes. For the high and the macro timeframes, it ain't changing around anytime soon, to be fair. And I also should denote this, which I've been avoiding discussing, although it does hold some weight here. We do see the weekly accumulation distribution indicator remain with its downside curvature. Now, to be fair, within the context of this downside curvature, which is actually very similar to this relationship over here, just by the way, we do see it finally going into the red for the first time in a while, basically since the summer lows over here. Now, again, these summer lows, like there is a great relationship between this action over here and this action over here. What I'm basically suggesting is that when we do see that actually get a positive slope, we're probably going to see the lows in for a while, at least on the higher term timeframes, and put in the next weekly rally. Here's the thing, even if you're the biggest bear of all time, which I would love to be fucking bearish. I love being bearish. It's my favorite thing. I mean, this channel was born in 2018. And it was the most pleasurable thing to be putting out these like clickbait titles like Bitcoin going to $50,000. And then the whole content would be like, yeah, it's actually going to 3,000. It's so fucking funny, man. People got really, really mad too. Anyways, sorry, I apologize. Anyways, my point is that for right now, you do still have a weekly uptrend here, obviously. You still have higher highs, you still have higher lows. Obviously, what the bears are looking at is that you are very, 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 very close to creating new lows on a weekly closing basis, which would be had below $41,000. And yes, you do have a bit of a head and shoulders in here right now as well, which would have measure moves down, I think, all the way to like $20,000, which is relevant. But shit, first things first, Bitcoin has to, you know, come down and at least fill the gap at like 33 to 3,400, or sorry, not 100, but 1,000 in this case, right around here from, of course, the summer on the bear trap in July, and then, you know, we come back to it after that. But here's the thing, even if you're the biggest bear, and Bitcoin does make a lower low here, maybe even this week, definitely possible, a daily closure below about, I think it was $41,000 or so would probably do it for me, especially a weekly as well would certainly do it for me. You'd still be looking for Bitcoin to put in a lower high on a failed rally after that on a higher term time frame like this as a weekly. So it probably looks something like this, where you come down first, fill this gap right here, if you know, if everything else fails, and then pop back up, put in a lower high somewhere right around there. I'm gonna guess that that's maybe even around your 618 Fibonacci retracement. Holy shit, it's exactly right there. And that's at the point where probably this thing does turn out to be a steaming pile of garbage, and you could probably kiss this market goodbye for the years to come until like later within this decade. Until something like that happens, you know, the trend is still your friend, I suppose, on the higher term time frames like the weekly. But here's the thing, as long as the daily trend is down, it's not really wise to be, you know, holding long-term longs, at least in my opinion. But of course, everyone's free to do whatever the hell they want, because this is a free and an open society. And well, at the end of the day, I just want to be very, 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 very clear in stating where those critical regions are. And I think I did miss one thing with my explanation here. On the shorter term timeframes, again, there's a big reason why this 43,700 region is so relevant. It's actually maybe even a little bit higher than that if I did this. Did I do this right? No, I didn't do this right. So it is 43,700. The reason why this why this area is relevant, not just for a full hour, because that is obviously your range highs, but also the higher term timeframes, is that's your weekly 55 coming in right here as well. And as long as Bitcoin is below it, yeah, it is in danger of, you know, of course, reversing the trend. But if you are going to see something resembling a bear trap, you expect to see something right around here. In fact, exactly as you saw over the summer as well. So what we'd be expecting if this is going to end up being a bear trap and Bitcoin does base out around this region is very likely something like this, where Bitcoin spends, you know, no less than 2, maybe 3 weeks at most, kind of hanging out below it, you know, doing a little bit of that, and then pops back up. If you see something like that, that would be the next good signal. Until then, it's mostly hopium, but at least short term, you know, is showing a little bit of promise. So hopefully that was helpful. And there you go for Bitcoin.